Good morning, everyone. Welcome to the modern market, where every day we discuss everything to do with the modern market, that is the crypto market, the NFT market, and how to hopefully make some money on the internet, in this market, on the internet. Loaded up for discussion today. We have the markets are going back up. Bitcoin is back to 87K, might even have gone past 88 as Trump tariff concerns ease. We'll be talking about Fidelity filing for on-chain US Treasury funds and DWF announcing a $250 million liquid fund. We've also got the latest thoughts on price action on crypto and NFTs more generally, and some thoughts on the general state of the market coming up. So stay tuned for that. I've got Legendary and Bread in the co-host seats, ready to get into it. But just a reminder, friends, that nothing that we do, say, think, breathe, eat, or sleep here is financial advice. This market is very risky and we don't know anything for sure. So please proceed with caution and exercise your own judgment at all times. With that out of the way, Bread, it is Monday. It is the 24th of March. How are you doing on this wonderful Monday?
Everything you just said is true. It is Monday. It is wonderful.
It is.
I
said it. I wouldn't have said it if it wasn't true.
Yeah, man, the things are good. I know we were talking before the show of like kind of vibing, like how do we feel about the vibes of the market, vibes of everything else. I've been touching some grass, right? Like I got to, the weather's finally nice where I'm at. I'm in the Pacific Northwest, so I could get kind of rainy. Got to ride my bike, got to, go down to the store, walk to the grocery or the farmer's market to buy an apple, like, all the homey shit.
Talk about all these things like it wouldn't ordinarily be happening. Like these things are not ordinarily things that you would do or that you get a chance to do.
They wouldn't, they wouldn't for two reasons. One would be because the market's hot and crazy, right? Like I have so much pulling me to the screens that I cannot get away to do that. And then the other is that like the rain sucks. So we've had a lot of rain lately. The first day that I could actually do that and not get soaked. So both of those things ended up being true. The market was not pulling me to the screens, and then the rain was gone.
There's a deeper point to make here, but my first question is less deep. What kind of apple are you purchasing, Brad?
I'm a green apple kind of guy, right? I need a little tartness. And it's because I am a fan of secondary compliments to the apple, right? You put some peanut butter on it, right?
Oh,
you start dabbling.
With you. I was with you for a moment. Now
if you've never done that, then that makes sense because you're not American, right? So you don't have freedom in your blood. So
yeah, we have rules there. We have like decorum. We have basic decency.
Would besmirch the apple with adding things to it.
Exactly. I mean, come on, what's going on? It's absolutely
actually really good. I recommend it.
Okay.
Peanut butter or like almond butter. It's awesome with the green apple specifically.
Okay. Well, we'll consider that for sure. Legendary, you've been talking about your AI integrations, especially to do with your health. Is this something that your new Manus AI companion would be recommending to you?
Yeah, a couple of things here. I love the Apple talk. It feels like there was a post on the timeline, when people start to get wealthy, the things that they're focusing on, and you have those, the one sort of people like first go for the Rolex, go for the car, and then like everyone, it seems like, is after that thinking about what is really important, which is health maxing, extending, longevity hacks, etc. And like, once you're in that like sphere, you're like, oh, I'm buying this apple from the farmer's market. This is super exciting. So you kind of circle back to what used to be the normal and regular life before. Specifically to your question, Manus is this AI agent that the timeline's been pretty excited about, because you can give it a task and it just goes to work and reports back to you 30 minutes, 1 hour later.
You've got to give people more details though from what you're talking about. This is like next level.
And a lot of people want to have access to that. This is why on the secondary market, like whitelisted accounts have been trading anywhere between 10, 20K. Obviously, prices going down a bit on that. But the thing is that's so interesting about it, you can, and I think Alex Finn had also this one post on it where Alex was like, look at my posts, look at what I do as a creator, come up with an idea for a SaaS business, scale that to 1 million, and it produces a bunch of documents. It comes up with 12 documents how to do that, but it can also do so much more. I asked it to come up with a website for like stock markets that I find interesting, criteria that I look at. And it was like, yeah, you need the Yahoo API key for that. I'm like, no, you can sign up yourself on Yahoo and get an API key yourself, and it can do all those things. I asked it to give feedback on a website, and it wanted to have access to the backend and do it, do the improvements itself. You can watch it while it's clicking on the computer in its little sandbox and playing around. It's very, very fascinating to see that. And I've personally been using it to enter my biohacking era. So I provided it with all the data, blood works, all of my like medical history, obviously blacked out the private, the privacy related details on that. And I was like, do a literature review. What am I supplementing? What am I eating? What should I avoid? What should I do? Focus on top tier peer reviewed journals, focus on meta analysis, focus on who's like sponsoring those journals, and come up with something interesting. And I got like 50 pages back of literature review plus recommendations. And interestingly enough, and I mentioned that before the show, the one compound which was turned into a meme coin when we spoke about that when decentralized science DeSci was still a trend, was urolithin A. And that compound, obviously, has been a lot of longevity research going into that, and it's not the meme coin people who invented it. Is now one of the things that I am supplementing and I'm importing to get my hands on it. So I'm turning into I'm turning into a mini AI fueled Brian Johnson, which also seems now to be something that people who have accumulated a bit of wealth are doing in their downtime.
So I had actually there's someone posted about AI doing like rote tasks. Like why is every AI ad talk about like booking travel? Or like everything is about like book travel for me. And I was like, like I get it. Like I travel.
That's what normal people do, Brett. They book travel.
Yeah. And I was like, like if I reflecting on it, I was like, I wish, because like I bet I have habits that I don't even realize that I have. And I wish I had something that would analyze all the shit that I do and be like, bro, you typically book for red eyes, and like, I got you. Like, this is what you normally do. I can hook you up because you don't realize this. You don't realize you prefer this. And then I thought about like extending that to basically everything else that I do, right? Like when I work, how I work, like whatever. I wish something could analyze all of my shit and just tell me like, you tend to get up a little too early, a little too late. You don't roll out of bed at the right time. I bet there's something there. Collecting the data is the hard part, but if I could build an AI agent on my profile, specifically all my little behavioral nuances that I have, and then give them some autonomy, it'd be pretty cool. I mean, Google is probably the leader for that, right? They're the ones that has all my shit already, even though they almost deleted my entire timeline this weekend. That would have sucked. I went from like 700 cities in like 12 countries to like, where have you been in the last 6 days? It freaked me out for a second. Yeah, they sent me an email that was like, hey, P.S. we had some technical issues. We identified you as someone who might be affected. You should check it out. And like your entire timeline might be wiped. Luckily, I had a backup, but yeah.
I mean, I wish there was something like that, and I hope like at one point the context models will be like deep enough so that you can feed all of the data into OpenAI or wherever you want to feed that into. But one thing that I already found interesting is, and that only works like if you have used ChatGPT, Claude, whatever, to like enough of an extent that it already has some data on you, is go to your like favorite LLM and ask it to tell you something. And it works very well, for example, with ChatGPT, because it has like cross-chat memory. Like based on all of our interactions that we had so far, tell me something about myself that I previously might have not realized about myself. And that was a very interesting response that I already got by ChatGPT, which was pretty accurate. And some of the insights were like, didn't even notice that.
What did it say? That you'd like peanut butter with your apples?
Yeah, probably that.
Interesting stuff. Yeah, maybe we're at that time. I think we're ready for these AI agents to get a little bit more supercharged. Yeah, I think we're very, very much ready for that. Right, we've got a lot of stuff to get into today. Despite it feeling like a bit quieter, which maybe we're going to touch on again in a moment, things are maybe heating up. Let's get into it, starting with the price action as usual. With the majors, we have everything green. What a delightful thing to be able to say on a Monday morning. We've got Bitcoin up 3% to 87.6K, up 5% on the week. Got ETH up to almost 2,100. That's up almost 10% on the week. We've got BNB at $630, Sol at 141, up 6%. And that is that for the majors. On the meme coin side, also a lot of green. Got Doge up a couple of percent to 17 cents. Got Trump up 10% after he decided to tweet that his coin was like the best coin or something like that. And people liked that. Pepe is up 4%, Bonk's up 6%, SPX Murad's coin is up 22%, Fartcoin is up 8%, Whiff is up 4, Pengu's up almost 10, Doge, AI16Z is up 10, Ket is up 40. What on earth is going on there? That's on AVAX. Peanut is up 8. So generally green, Mog is up 10 as well. So green in the majors, green in the memes, including AI as well. AXPT is up 22% in the last 24 hours. Getting into the majors, the headlines themselves, we've got Bitcoin, as I said, getting past 87K against the backdrop of maybe these Trump tariff concerns easing. So Legendary is going to speak about that in just a little bit. We've got Fidelity filing for on-chain treasury fund, joining the asset tokenization race. I think that's pretty significant given the size of their assets. So we'll talk about that as well. And then we've got DWF announcing a $250 million liquid fund, which I think is interesting because a lot of people are talking about the importance of liquid funds now. We've yet to see. I think everyone wants the early stage access always because that's historically been very profitable in crypto, and a later stage fund has not been, or sorry, not a later stage fund, but a liquid fund has always been harder because the price of these tokens go down over time. So interesting to see that develop, that narrative develop. We'll touch on that. We've also got some quite big NFT sales in general. Xcopy Instabags and for 27 ETH. These low edition Xcopy collections really have diamond-handed collectors. CryptoPunk Alien sold for 420 ETH, and CryptoPunk 3D glasses sold for 120 ETH. Legendary, is there anything else on the NFT side that we need to know?
Yeah, I'm very pleased to answer this question in yes, which I haven't been doing in a while. Actually, the whole NFT market is looking pretty interesting. We have Pudgy Penguins being up almost 20% over the last 7 days, well above 10 ETH, 10.55 ETH floor, up 7% over the last 24 hours. We have a very similar picture for the Bored Ape Yacht Club being up 6% over the last week, 5% over the last 24 hours. Not as much as Pudgy after that NFT announcement, but still a healthy gain. And at the 13.4 for ETH floor, obviously we had that very big sale on the CryptoPunk side of things, but not only was that relevant, the whole CryptoPunk floor is also slowly moving up as ETH is moving up as well. We are essentially at 40 ETH in US dollar terms. That's 84K almost for the CryptoPunk. So seems to be a bit of a relief rally that goes hand in hand with ETH flirting with 2.1K.
Absolutely. Good stuff on the NFT side. In terms of the Web3 Roundup, to get up to speed with everything else you need to know, some other pretty cool pieces of news. One thing that I missed out, I'll just say off the top of my head, Mega ETH obviously launched their testnet. I think it was over the weekend or Friday. So that's been pretty exciting to see what's going on there. We've got Berachain announcing proof of liquidity beginning today. That's their kind of novel mechanism for you to kind of accrue BGT tokens. That requires like a bit more of a deep dive, to be honest, to fully understand what's going on there. Trump post about Trump on Truth Social, so sending it 10% higher over the weekend. Tether announced a full audit from the Big Four accounting. They said that's going to be a top priority, given that's always been something people have been asking questions about with regards to Tether. Metaplanet added $12.6 million worth of Bitcoin after appointing Eric Trump to the advisory board. Nice job. Nice advisory board. Nice advisory position to just be able to say, the thing that I advise you to do is buy some more Bitcoin. That doesn't sound too bad. And then finally, it's more comical post over the weekend. The meme coin routine hit $15 million after the viral morning routine video, about a couple of minutes long, of just this absolutely stacked guy going about from like 4 a.m. onwards doing the most absurd, relaxing / I don't know, life hacking, allegedly healthy things to a way to start a day. You haven't seen the video, I'm sure you have already, but that is what that is. And there was the meme coin that went to 15 million, which is kind of the first big runner since for a
Which is
while.
that's not a big number. Like that, if I think I looked it up, that like that little viral post or whatever was the most viral in Twitter's history, at least just like according to Grok, and as far as I can tell from searching other things, right? Like I found a post, that post specifically, that like 550 million impressions. It was 575 at one point, and I'm sure it's over 600 now. And for the meme coin to only go to 15, like that feels really, really low. Like that was like people had
Out of proportion
daily runners to like
memes, right?
10-ish, right? Like 10 was the point where you started talking about it for some people. And like that's the runner to 15. Like I think that's more telling about the times than anything else.
I think that's very fair. That's very, very common. Like the proportion of virality to price, I think ordinarily you would think something that with that much virality should move things further. I take a point.
Yeah.
Ledge, what did you think about that? Sorry,
Soul
go on, Brett.
Jakey, yeah, like I commented on that. I was like, man, this thing actually ran pretty crazy. And then someone linked me to the one that Soul Jakey actually made. He did a post that like mimicked it, but like from his side, right? And even that ran really well. I think they got like 14 or 15 million impressions. So like you have two videos both getting more impressions than dollar in the market cap of the actual token itself. And I just saw like a lot of people retweeting, doing much stuff. There's just, I don't know, there's just not a lot of energy in the space. I know we were talking about that before the show too, right? Like we announced our testnet, you did the Barachain liquidity post. Like we were a little self-conscious whenever we posted that, like after looking at the numbers, but then thinking it was us. But no, I think it's a little bit of the industry right now. It's just everyone's a little fatigued. We're starting to enter the spring, summer months, right? So you have a little bit of the sell in May stuff coming up now. So I think just generally conversations are dull.
Yeah, I mean, two immediate thoughts on that, and maybe that takes us into the conversation we're probably going to go into. First, thanks to Takeoff Tone on the YouTube comment saying it's like only 500k liquidity on that coin, so not a lot. That probably helps move things along. Second thing is, yeah, just observing our own behavior, right? You said yourself over the weekend, you kind of took some time out, had a walk, went to buy some apples, did some other things. Like I get more and more confident in observing or reading the market by just observing my own behavior and how I feel and how I'm acting, and using myself as a proxy for the rest of the market. Like, remember back in that day when I said that I was going to start going back to the gym? Like, that was just an outstanding moment in time to call that I thought that things were going to go lower, basically, because people are logging off or taking some time, and we're noticing it on engagement, noticing it in people's behavior. And so I think that's all part of the mix. Doesn't mean that, excessively bearish, but it just means that, there's this plateauing period or cooling off period after what was, I think, just in a completely insane run in January up to the inauguration.
Yeah, I mean, some of it's just fatigue, right? Like you can't sustain like craziness for that long. So it's just like, man, all right, give me a little break, I'll cool off a little bit. I think just collectively people are coming to that point. But like things are happening, right? We're going to talk today about the on-chain treasury shit. Like there's like the glacial pace of government and like the industry or industrial side of this stuff is not going to stop moving. So it's like it'll be here when we get back. And we just, we slog along.
Can I ask one question? So, Ledger, I'm going to come to you to maybe just riff on that for a second. This idea that, okay, people are cooling off and things are slowing down just a touch, which they definitely are. I think the industry's moving forward at a great rate on the corporate side, and there's still loads of awesome stuff getting built. But on the human crypto Twitter side, definitely things have taken a breather. But the other thing I wanted to bring up, which we didn't get a chance to speak yesterday, was this piece of news. I was curious for your thoughts on where you read this, because I think my initial reaction is that this is like super concerning that this is even a product that exists. But this was the news. I'm just going to share it on screen for people who are watching. It needs to the settings to change. This is news that Doordash users will be able to take out loans to pay for their lunch after the company struck a deal with Klarna. Customers will be able to split payment into 4 interest-free installments or defer payments to a more convenient date. This person who tweeted, I don't know them, just final comment on it was, taking out a loan to buy lunch may be the most insane thing I've ever heard. And I think that is probably my instinct too. Like when you're thinking, remember we were talking about everyone in this space always wants to talk about retail. Like, when are retail going to come? When are they going to come to buy your bags, whatever? Like, look, I think we've already been through that period to the extent that they were going to be here. But the broader point that I was trying to make quite a lot, Ledge, can we get the screen changed? The broader point that I've tried to make quite a lot is, I don't know if people have, like, on a general scale, for the people who might want to be aspirational ordinarily, I don't know how much spare capital there is around. And I feel like this product is coming into existence because it's a necessary product, like it's a needed product. So I just was curious, which basically means people are broke, like generally on a broad scale. Like, if this is something which might be useful to people. So I'm just curious for your read on the situation. Like, is this happening because people really don't have that spare capital? Or is it just like, no, people are fine, it's just, this is a thing that we want to provide as an option, and, you know, people might just take it up because it might be a helpful thing? Like, what's your, Ledge, maybe to you first, and curious for your thoughts as well, Brad.
Yeah, I think it's a very interesting piece of news because Klarna is a very interesting company as a payment provider because they do things a bit different, right? So Klarna is very well known in Europe specifically for the buy now, pay later type of payments that are supported by a lot of online merchants. But the thing that they don't do is they don't charge you interest rates on the deferred payments, basically. So yes, in the background, they are partnered with banking companies, with banks, to provide those loans, but they don't charge you interest for that. And they don't necessarily mainly monetize off you as the customer. Well, there is, so maybe it's just taking one step back. So what happens is you defer your payment and you pay at a certain amount at a certain point in time. If you want to defer again, you can't do that, and the company will cut you off from like further deferring your payment. There is a fine that will be charged at a certain point in time. But that is not the typical way how they make money. The way that how Klarna makes money is, because this is getting so popular, is by actually charging the merchants more to implement Klarna and to implement the BNPL, the buy now pay later payments. So they're like basically taking away the interest like lift from you as the customer, and they're charging the merchants more. And they're kind of, they want you to defer as much as possible because then they can charge the merchants more. And everyone is ordering food, and getting into that and having the option to defer payments with that is a massive unlock for Klarna. I think there is an average amount of $100 that the typical customer owes Klarna, and it's just using that to defer the payment. And it's also very interesting, if I order something at my online pharmacy here, which is one of the pharmacies where I can pay with credit card, I have to use Klarna in my bank account. The standard option for that is not to pay now, it's just to pay in 30 days. Which is super weird. So I order now, and even if it's like 50 bucks or something, it just defers the payment automatically. I would have to manually go in and be like, no, pay that shit now. I don't want you to, you know, credit my account a month later when I have no idea what I was doing a month ago. But that's a very, very interesting like business model by Klarna. Now, on the other side, on the question that you actually asked, you know, do people have money to spend on groceries or not? If you look at it at the like face level, it's pretty dystopian, right? You can pay your burrito in 4 installments or whatever you're ordering. It's pretty weird, but I don't think that this is like emblematic of what is either going on or not going on. I mostly think for Klarna, this is like a very, very good move, A, to make headlines as a payment provider once more, and B, to just have this revenue boosting tool for themselves. If people will certainly use that, and there will be cases where, like, bro, it's pretty wild that you have to defer your pizza payment because otherwise you can't afford it. Yes, but I don't think that implementation as a result of, like, you know, food or grocery prices being so expensive. It's just as a result of Klarna's like business strategy and growth approach.
Interesting. Okay, I was definitely curious to hear your thoughts. I think I'm probably maybe slightly on the other side to you, Brad. Just curious where how you view that situation that's kind of arising.
Yeah, honestly, it's not something that's really piqued my interest. So I don't have any strong opinions on it, thoughts.
Okay, fair enough. Just seeing Cap in the comments says he agrees with me, but not only are people broke, many unable to secure or maxed out traditional credit. That's, I guess, the interesting additional point. Maybe this is just a more helpful and easy to access credit line, and rather than try to secure some other big credit line for, when you have to justify what you need it for, maybe this is just the easier option. One follow-up question,
Not
Legendary.
really though, because if you don't pay back, you can't extend, you can't use that. They
So
actually
that's
have
what.
a
So that's
pretty
what I was
high.
going to ask.
Yeah, so you order your one burrito, which you can't afford, and then you can't pay your second installment in burrito. You can't use that anymore with them, basically. So it's a one-time basically offer in that sense. This is why Klarna actually has super high repayment rates, because it's
Because
not
you don't get
it's,
fed.
it's not used like as another credit card where I can accumulate that because I don't have enough money on.
Okay, so you need to keep making every second, and then every following installment you need to pay in order to continue the credit line.
It's very similar, at least how Amazon does things in Europe. I don't know how they do it in the US, but here it's also, if you use the buy now, pay later on Amazon and you fail to pay in time, you're just banned from that feature and you have to buy and pay now.
Interesting.
Is this just a natural byproduct of like a sideways down-ish market, right? Like it's been chopping for a while, which means people who are true believers have probably been trying to DCA for a little bit. They probably shot their load a little too early, and now it's just extended a little further than they can like continue to buy, and therefore like we're kind of in this stagnation period until a liquidity injection, right? We need more people from outside to get excited, to pour in money so that we can make money, and then to spend that money on things that doesn't deserve it, and then for us to start the cycle over again. Actually, that's kind of always the flow,
That, and in this case specifically, Klarna also seeks to IPO, apparently, based on the paperwork that they've been filing. I think they're now also the exclusive provider for buy now, pay later with Walmart in the US, that is. So it is maybe a bit of a result of a sideways market, sideways interest. And for them, it's just a good occasion to show, hey, we're actually able to make pretty sick deals, like from a company's perspective with DoorDash or with Walmart, and trying to get that positive momentum if they really were to IPO on the New York Stock Exchange.
I actually think it's something much deeper. So look, maybe there's something to do with the market that we're in, which is that. The thing that I've been thinking, I've spoken with a few people, it's like one of my bigger ideas about the trajectory that we're in is, I think that the middle class might be a historical anomaly. And this is like more like a centuries, like a millennium / centuries analysis. I'm not certain that what we experienced in the 20th century as industrialization kind of distributed wealth to all kinds of people and facilitated them to live lives that they were entirely unable to do so before. I'm not sure that that is in line with how things were always before, and I'm not sure that is how things will be moving forward. I think that the default scenario for society's makeup is not that. It's about fewer people having more of the stuff, and then a lot of people being super reliant on those people to provide in some way, whether that's via taxation and via the state, or whether that's through a more feudal system where you literally are working for those people and are entirely reliant on them. So this is like maybe just the bigger thought, probably requires a lot more time to analyze that. We've got the headlines to get into in a second, but if you have any reflections on that,
I
shoot
think
away.
that's perfectly accurate. Like, middle class in that sense did not exist before the Industrial Revolution. The thing that came closest to it before that were like your merchants, your artists, that were like still supported by the elite and got like benefits from them to be able to do whatever their craft was. That is like kind of a bit of the, prototype of what is now the middle class. But before the Industrial Revolution, that did not really exist at a large scale. And it's also like a byproduct of, democracies kind of, to be stable, need a happy population. Then you need to have a middle class because not everyone can be rich and wealthy. So it kind of makes sense that we have that now, but very much agree. It is certainly a historical anomaly.
Yeah, I think we'll kind of that's when I start to view this through that lens. It's like the people who would normally be or would have been able to afford this stuff before seem to not be able to do that. And I think it's part of that shift where the middle class is just getting absolutely smashed over and over and over again, and really, really struggling to be for there to be a meaningful middle class. Okay, so those are some interesting thoughts, I hope, on what is going on more generally, general thoughts on the market. Let's get into some more specific stuff now. Things seem to be turning around. Bitcoin's back above 87K. Tariff concerns seem to be easing. What do we need to know about the major price action and whatever conversations going on with Trump, whether it's tariffs or anything else that he's going and tweeting about at the moment?
Absolutely. Stock market is up. Crypto majors are up. It does seem that we see a bit of relief in the market, and that certainly has to do with some of Trump's comments, which also have positively, as I said, impacted the stock market as well. So on a headline level, we see that tariff concerns are easing, and it seems like that with the new series of tariffs that are to be implemented from April 2nd, there's been a bit of a change in tonality and language coming from Donald Trump, saying that there's a lot more room suddenly for flexibility when it comes to the tariffs. It's not like hit everyone with the same amount of tariffs, but yes, he talks about Liberation Day in America when there's going to be a series of new tariffs coming, but that there's a lot of flexibility there. So he's saying, I don't change, but the word flexibility is an important word. Sometimes it's flexibility, so there will be flexibility, but basically it's reciprocal. And also talks a bit more about like fairness when it comes to the tariff side of things. But it's something that the market has clearly liked. And also in conjunction of that, we had the FOMC meeting, which we spoke about, which some people reported on that a bit more carefully. Some saw a bit more of a positive reading, but things that were definitely positive were some other economical data coming out of the US, mostly pointing to the US job market remaining more resilient than we expected it to be. So from the macro standpoint, you had a bit more news that gave the market more confidence and removed a bit of the uncertainty when it comes to what is Trump's next move when it comes to the tariffs on April 2nd, which again impacted not only crypto, not only the stock market, but also for the first time has seen a bit of a stronger effect on the dollar. So the dollar has been very, very strong before Trump. It has been strong at the start of Trump's second presidency, but as soon as we got into the tariff wars, the euro, other currencies have increased in strength massively. So the euro dollar almost went from trading at parity to €1 equaling $1.09. Now we are for the first time down from that high at 1.08. Also, the entire US dollar index, which has 6 counterparts, 6 currencies that are trading against that, was marginally lower a bit. So it seems like that the reading here is that this trust in the reduced uncertainty is not only like a domestic US reading, but those international markets are reacting to that and are pushing the dollar to be a bit stronger, basically, against the other currencies that it has been benchmarked against.
So you think the market is starting to not believe that the tariff situation is going to be as aggressive as maybe it was insinuated at the beginning?
Yeah, it basically went from the mindset that everyone's going to be hit with massive tariffs and holy shit, what the fuck is going on? We don't know how this is going to impact the economy to, oh, there might be a bit more strategic depth to it and there might be a bit more flexibility depending on how the counterparties or the other countries are reacting and engaging in a conversation with Donald Trump.
Interesting. Excellent summary. I would encourage people to have a watch of, I think this is pretty historic that this is even available to us. The All In crew, I think I mentioned this at the back end of last week, but they did 2 interviews last week, one with Besant and one with Howard Lutnick, both for around an hour. The Lutnick one was, I think, almost an hour and a half. And if you want to get a sense or a read of what their views are and how they're positioning themselves to attack the debt, what the strategic thinking is for the tariffs, how they want to approach, this administration and what they're seeking to achieve. Definitely have a watch because I thought it was quite illuminating. They explained some of the rationale for the tariffs, which I wasn't necessarily aware of before. How things related to income tax, for example, in the United States, which basically didn't exist up until a certain time, and then just different bits of information to do with tariffs, which I thought was helpful to get some deeper understanding. I know there's still like a bit of a lightning rod topic. People think that they're really, really bad from the economic perspective now, but it's at least helpful. And I just don't think you get. This is the thing I routinely think now in this space. It's so amazing that we get access to all of this information, and then we can make our own decisions. So I watched both of those interviews. I thought it was very illuminating. Did either of you see those? Did you have any takes on it?
Didn't see it, but I would be very curious to get like a headline key takeaway from either of the interviews or both.
My one headline key takeaway, which is less to do with the strategy, which I guess we're going to see unfold anyway, is more to do with the competence of the people. And I think one of the things that people have always accused government in general, and one of the things that people have always been hesitant to commit capital to the government, so like, look, government's inefficient, they're useless, they will allocate your money poorly. Like, we should reduce the scope of the government because you have two sides, right? You've got the people who want to reduce the scope of the government. You will have people who think big government is good. But my takeaway from listening to these two people over a long period of time is, though I don't necessarily agree with every single thing they said, I think they're incredibly capable people. And it sounds like they've assembled a team of incredibly competent, capable people. Maybe they overstretch. And I think this is probably the criticism, right? The things that are going through the courts where they're trying to push aggressively hard to get this stuff done because, maybe they don't come from a bureaucratic administrative background where you need to respect the specific process. And I think that would probably be the biggest criticism, that they might be doing things that are either, I don't know the technicalities, whether they're literally illegal, whether they're unconstitutional, one of those two things, because they're pushing so hard to move fast and break things in a way. So maybe that would be the criticism. But I think if you listen to those two things, you've got people who at least have been incredibly successful beforehand, and I think are making a sincere attempt to try to make things better at a minimum. That would be my take. Maybe that's enough on that though for now, unless anyone has anything else. Let's get into the second headline, Brett. What do we need to know about these Fidelity potentially coming on chain? This is a huge asset manager. What's the thinking here? What do we need to know?
Yeah, let me slide in here. So Fidelity filed for on-chain U.S. Treasury fund, joining the asset tokenization race. That's the headline. What it comes down to is, and you guys may be familiar with what this actually means because of the BUIDL fund, which was launched by BlackRock. But Fidelity is managing 5.8 trillion in assets and just entered the race for tokenized U.S. Treasury space, which has actually grown 500% year over year. The interesting things from this note, so it's like, cool, they're bringing treasuries on chain. Why is it interesting? What's going on with it? One is just to note the growth of the current the current on-chain RWAs. One, if you look at the BUIDL fund, right, which is launched by BlackRock last March, actually, it actually just crossed over, I think it was 1.5 billion in total assets, which you can see in two different places. One, we have a Dune dashboard for that, but there's also a specific website you can go to track a lot of this stuff, and rwa.xyz /treasuries. So yeah, you can see here on screen now is the BUIDL fund, which is also launched on Ethereum, which is of note. And you can see the Dune dashboard had a huge spike recently, and it's crossed over 1.5 billion in total supply. Distribution's getting grown, and actually it's on several other chains. Like, there's a breakdown there on the right. You can see there's actually a decent portion that's on several other chains, although Ethereum has recently jumped back in to take the lion's share of everything. Even when at its lows, it was at like 70%. So it's just more stuff coming on chain in the way of T-bills. And this specific product is set to be live by May 30th if it becomes effective. So that's, another month from now. Or wait, no, we had April next. So 2 months from now. That's how that works, right? April, May. Yes. So 2 months from now, which is kind of commentary on how slow this shit actually it moves, right? Like, we're announcing it now and it's going forward, and it is kind of bullish Ethereum, right? If you and there was another post by Dan Smith from Blockworks Research. He's the head of research, and he's saying like, well, they chose Ethereum. Why do we have these RWA specific chains coming to market if like everyone's just going to go back to the main one, right? Like the big dog, and like that. The commentary on the time it takes for the stuff to come to market and the established position of Ethereum and the choice to go to Ethereum here kind of makes you wonder if that is what's going to continue to happen, right? Like history on me, right? I had a lot of because of my bags from 2017. I spent a lot of time and energy in other ecosystems, right? And another L1 is a small one, whatever. And the one of the dreadful things that I realized as a competitor, because they're competitors, was that like Ethereum has such strong network effects and man hours time, the stuff I continue to espouse about Ethereum, that like there's a lot of deep-seated stuff that is just gonna like it may move at a glacial pace, but like there's so many people with so much interest in making this thing grow, and the time it takes the roots to like have embedded in like the government and shit is gonna be there for so long that like it's kind of just gonna be the default answer for a lot of stuff, right? It's reached this like good enough point where just like over time it's just gonna kind of slowly absorb basically everything. Now, what that means for asset pricing, that's a different conversation. But like the fact that it's like just the default answer as a programmable blockchain, right? We're starting to see Solana step into that. Means it's just like eventually it's just going to absorb basically everything, whether like a feature that you have on an alt L1 or whatever. It just kind of keeps doing that. Yeah, that doesn't mean other things can't exist and they can't thrive. It's just like we're continuing to see this kind of stuff. Whenever the pace is, we announce the thing, we need approval 2 months from now, like it can be implemented. You start thinking about how that plays out for basically everyone else that wants to do the same thing. And instead of trying to do a net new thing, which will take 6 months to do the thing, they want to come to market, right? And they want to come to market in the same way that something else came to market so that they can get there quickly, they can be there effectively, they can get their version of the thing. BlackRock's already on Ethereum. Now Fidelity is going to be on Ethereum. Like everyone after them is probably going to come in and say like, we'll just do the same thing. Like there's already a roadmap for it. There's already a template for it. We'll implement the same thing. And through that, like we can get the copy pasta product just the same way that everyone does the same shit here in this ecosystem. So it's bullish that it's on Ethereum. Questions whether or not RWA specific chains will become a thing. And RWA is just broadly as an asset class is going up into the right still.
One of the most interesting comments I've seen on that, especially when it comes to why on ETH and what is pushing this narrative, was by the Ethena founder. He was saying stablecoin issuers decide where the demand for these treasury products will sit at scale. Ethena holds 60% of BUIDL alone and accounted for 95% of the growth in BUIDL in the last 3 weeks. So very interesting to see that. Once more reconnecting to one of the main narratives, which is the stablecoin issuance and the stablecoin adoption in crypto.
And then we talk about their L1, right? So Converge, right? So if he's driving, maybe he's saying that as like a bullish thing for Ethereum, but then like as a slight nod to like, look, bro, I'm taking that action to my chain in the future.
Yes, I think that is certainly the case. Something you said that was interesting, Brad, I wanted to just double click on. On the one hand, we talk about these alternative L1s or L2s saying, look, general purpose isn't going to work now. There's just too many. You need to be specific. Probably it's just like a view that seems to have come about, seems to make sense. Like, look, there's so many of you guys now. You're going to need to drill down into something to make you guys stand out versus all these other competitors. But now, I guess part of wrapped up in what you just said was, okay, well, you say you have specialized in RWAs or you're specialized in something else. That will, if that stuff just defaults back to Ethereum or elsewhere, frankly, whether it's Solana or whatever, just basically already trusted, highly efficient, very strong network effects blockchain. Do we just need this period of time where all of those experiments of more specific things might not actually even be the way? Like if those things are going to go back to mainnets that are more established, more trustworthy, with better network effects.
Yes, but that I wouldn't even say that's exclusive to like these alt L1 experiments. We're going to see it with L2s too, right? There's so many
Yeah,
L2s that
that's
get
what I
spun
mean.
up.
Yeah.
Yeah, even those chains are going to get fucking dunked on over the next 12 months, right? There's some that are straight up paying to exist, right? They're not making money on users because there's no traction there. So, you know, whenever we had this really strong narrative over the last year plus, that's like every single app is going to have its own chain and everyone's going to have 100% of everything. And it's like, pendulum swung really far that way. It probably overswung. It's going to come back and maybe even overswing the other direction. Maybe it's already doing that, right? Where you have these other, oh, we need to have the biggest, fastest chains, kind of like us. Like that's our kind of narrative. And it's probably going to swing back to the middle somewhere or settle somewhere ultimately in the middle. Yeah, it's just like the nature of humans broadly. And I totally see that playing out here.
Interesting. Okay, very interesting stuff. Big conversations on Ethereum and its whole ecosystem, I think. So happy to have spoken through that. Final headline for the day is DWF announcing $250 million liquid fund. This is news that DWF Labs, the crypto market maker and investor, is excited to announce the launch of their liquid fund aimed at accelerating the adoption and expansion of mid and large cap crypto projects. I think this is important at the moment because many people have been speaking about just where we are in the market, where lots of quality projects are maybe beat up a little bit in the market at the moment, but they've already launched and they've already got their token out there, but maybe their investor unlocks have begun and the market has obviously taken a humongous downturn in the last month or two anyway, but they've actually established a product market fit and are doing pretty well. And so people are calling for more liquid funds. Like people should be buying that instead of continuing the endless VC circus, which is just keep funding more of the same stuff that we've seen 100 times already and taking your 5x after 2 years, and which rapidly declines, and even for products that are not any good. So people are calling for more liquid funds. They've positioned themselves as one of the most active investors in crypto space. In the last 2 weeks alone, the firm, as part of this strategy, I think has already invested over $11 million into promising blockchain projects and will sign 2 major investment deals worth $25 million and $10 million as part of this $250 million liquid fund, with more announcements coming in the pipeline. So I guess they're invested, well, just some further information. The investment size is ranging from $10 million to $50 million per project. Fund will provide strategic crypto venture capital and ecosystem support, ensuring sustainable growth for projects that drive real world adoption and help promote change in the industry. I've got a thought on that in a second. The way that, so 2 points. One, I think a lot of people are looking at live projects now because the market's speed up. Maybe investor unlocks have started for projects that have already established PMF this cycle. And that might be more attractive now than going into the next launch for another L1, which people are already starting to feel is like maybe not as necessary as it would have been 12 months ago. And then the second thought is, I'll hold the second thought for a second. Legendary, thoughts on this? Thoughts on going more liquid at the moment, even from a personal perspective, right? Because right now we all have the opportunity to invest in deals on the side, or we can go into the liquid market, or we can farm stables. Like, how are you thinking about it? Again, we talk quite confidently that our own behavior is a reasonable proxy for what might be decent market activity now. How are you thinking about it? What do you think of this move?
Yeah, very interesting. Not only the increase, I feel like in liquid funds, but also specifically for this one, if you read through the entire announcement where they go through the, what are we going to provide for the companies that we are investing in, they are saying it will include a full ecosystem growth strategy, focusing or including number one top priority stablecoin, TVL, and ecosystem expansion, supporting liquidity and DeFi activity for L1, L2 networks, and it goes into lending markets, etc. So it's also interesting to see how DWF is looking at an investment and what they want to provide them with. And the last thing is the comprehensive GTM, the go-to-market strategy. And the first thing is stablecoin TVL on ecosystem expansion, which then also means that the stablecoin TVL is becoming like a more and more important metric for companies like DWF to look at if they're pushing this so hard that they make it like the number one on their list of 4 items.
Interesting.
And yeah, sorry, I forgot from the personal behavior. I like liquid funds, and I feel like, we've seen also the liquid lending with I always want to call it Winter Cat. What's the Wildcat? That's the correct name. The Wildcat stuff where you can lend to Wintermute and others. The liquid funds. I feel like there's this flexibility in how you like invest to park your cash, because so much of it is like mercenary in this space, has become like a tremendous importance, which on the flip side is pretty cool, because you then actually incentivize builders to build really interesting products where you want to keep your money in, because you have the option to move your money out way more flexible terms than in other like typical, more bonded style of investments, which is in theory should foster competition and innovation and should help to build more attractive or more interesting products for the investors.
Yeah, for me, I'm definitely thinking liquid is the way at the moment, because everything's about return of value, right? If you're looking at hype at $12, $13, $14, which is when I was speaking last week, where it's like, look, it's better than buying it at 30, isn't it? Like if you're bullish in the next 12 to 18 months and hype is sitting at $12 or $13 or $14, like, is that better or worse than buying it at 30? And do you think it's going down to 6 or 8? And I don't know, it's worth having a nibble. Like that's how I was speaking about it in the last week or two. And I think if you're bullish in the next 6 to 12 months, you're probably thinking even BTC, and BTC being the main mark by which I think you're trying to evaluate your own performance. With Bitcoin down at 81 or whatever it was a few days ago, 82, like, are you gonna 1.5 or 2x your stuff, your private capital in the same amount of time? Depends on your views. If you're bullish in the next 6 to 12 months or 18 months, is it worth tying up your capital in a private round when there are so many things that at a discount right now? I think that's the reasonable question that people should be asking themselves. And I'm leaning towards the liquid side on that, unless there's some outstanding deal that you really think is important, or some builders that you want to back, and you take an alternative view for that reason. That is my thought there. Brad, any final thoughts from your side on liquid versus illiquid investments? Close us out.
Only that I am highly liquid, and I'm glad that I did it. I like, now, like, I question myself whenever I initially did it. I stabled up pretty hard over the last, like, mostly just around the Kaido shit, right? Like I sold in the Kaido stuff, and I questioned myself for a solid few weeks. Like, I fucked up. We're going up and to the right. Now with taxes upon us, I'm sitting pretty. I'm happy I did it. And then in this industry, like, I know, like, you've seen a lot of conversation around the big heads doing the liquid side, like the investment funds. And I'm in my internal conversations with players who actually are on the bid side of that shit. It's surprising at how much of the degeneracy they actually partake in. So it's good for all of us being like the normal people, right? Like, if they feel compelled to continue to be able to participate in this industry, that they have to bid up meme coins, awesome for us, right? It just means that we are easy, or we have a better capability to front run that kind of stuff, that level of capital. And you frankly need that level of capital if you want these, like, P&L screenshots that are exciting for engagement. So yeah.
Interesting. One final thought, which I think is really important to point out for people to be aware of when you hear these types of announcements of people putting X amount of money into whatever, you think, oh, wow, that's so good that they are putting in their money. You might think that is them inputting money and receiving nothing back. Therefore, they are net bullish on the thing because they're happy to tie their money up there. That is not always the case. We saw recently some conversations on the timeline about how teams are tying these capital investments into contractual obligations where it's like, yes, fine, we will put in $25 million into you. But when it comes to you needing to support for your liquidity and DeFi activity, you're going to have a contract with us and you're going to need to pay us via that contract. When you're trying to strengthen your lending market, we're going to be the market makers there. When you want help for PR and brand amplification, we've got a team for that. So like, I'm not saying that that's the case in this specific thing. They've obviously listed all of these business offerings that they offer as part of the liquid fund. Like, these two things are going next to each other for a reason, right? It's like, yes, we've got 20 million to give you. By the way, we've also got all these business parts that you can lean on. I don't know whether that's a no strings attached, like we offer you this with our money coming in, or if it's we're going to offer you this, and so it's going to be our money coming in, and then that money's going to find its way back to ourselves as we offer some of these products and services. That's the one question I have. I don't know the details on that based on how it's been described, but I'd keep an eye out for that, because I think it does happen in the industry, and I've heard some people talking about that most recently. Guys, that is a very interesting show. I think we kind of went around the economy a little bit today, spoke about crypto, general stuff, as well as a bit of health maxing too. Maybe that's the new standard 3-part series we do every day now. But guys, we do this every single day, Monday to Friday, 7 a.m. Eastern time for 1 hour. We're live on X video, YouTube, Apple, and Spotify podcasts. Thanks to my legendary co-hosts, Legendary and Bread. And we will be back with you tomorrow. Thanks so much for joining us. We'll see you again, same time, same place. Have a wonderful day. Bye-bye.